Every morning, 10 a.m. sharp, Wall Street opens for business and Bitcoin drops. For straight months, retail traders watched helplessly as BTC dumped like clockwork. Same time, every single day. This week, said stop. And you need to know why? Because it changes everything about where Bitcoin goes next. Welcome back. If you're new here, this channel is your unfair advantage in crypto. We cut through the noise and bring you institutional-grade analysis. Hit subscribe and the bell right now. This is the kind of story that changes how you see the entire market. Today, we're covering one of the most explosive stories in crypto right now. A Wall Street titan, one of the most secretive and profitable trading firms on the planet, has been accused of systematically suppressing Bitcoin's price. We're talking about JaneStreet. Here's what happened. Here's what it means for the Bitcoin price right now. And here's 3 critical market insights you need before you make your next move. Let's go. Let me take you inside this story. JaneStreet is not a household name, but it should be. This is one of the world's most profitable quantitative trading firms. They operate in the shadows of every major market. And this past week, the crypto community pulled back the curtain. For straight months, Bitcoin traders noticed something deeply unusual. Every morning at precisely 10 a.m. Eastern, the moment US stock markets open, Bitcoin would drop 2, sometimes 3%. In minutes, long positions liquidated. Panic selling followed. Then, price recovered almost every single time. Now here's the mechanism that makes this possible, and this is crucial because this is not simple market timing. JaneStreet is what's called an authorized participant in Bitcoin ETFs. That means they have a contractual right to create and redeem ETF shares directly. And crucially, they are exempt from the normal rule that you have to borrow shares before shorting them. So what does that mean in practice? It means JaneStreet can short ETF shares, push the price of Bitcoin down, trigger a wave of retail liquidations, and then cover at a lower price. Repeat daily. The data suggests they did exactly that. Now, and I need to be clear here, JaneStreet denies any manipulation. They call these allegations baseless. And some respected analysts agree, saying the 10 a.m. moves are better explained by normal ETF mechanics. But then, something happened that changed the conversation entirely. This is where it gets serious. On February 24th of this year, Terraform Labs bankruptcy administrator, the team winding down Do Kwon's failed empire, filed a federal lawsuit against JaneStreet. The allegations are extraordinary. According to the lawsuit, JaneStreet had access to non-public information about Terraform's moves. ALLEGTLY passed through a former intern who ended up working at JaneStreet. And on May 7th, 2022, a day that crypto will never forget, they allegedly used that information to devastating effect. Here's the timeline. Terraform quietly withdrew $150 million in TRA from a key liquidity pool called Curve 3 Pool. The public had no idea. But within 10 minutes, a wallet linked to JaneStreet pulled $85 million from that same pool. Before the market knew anything, Terra USD started slipping off its dollar peg. And within days, $40 billion in market value was wiped out. Luna went to zero. And the ripple effects leading eventually to the FTX collapse set the entire crypto market back by 2 years. JaneStreet flatly denies all of this. They call it a desperate, baseless attempt to extract money. And they point to Do Kwon's own multi-billion-dollar fraud as the real cause of Terra's collapse. The courts will decide. But here's what's undeniable. When the lawsuit dropped, something extraordinary happened. The 10 a.m. Bitcoin dump, which had happened almost every single trading day for 4 months, suddenly stopped. Bitcoin surged over 6% in a single day. $323 million in short positions were liquidated. The weekly candle flipped green after 5 consecutive red candles. The crypto community went wild. Now, correlation is not causation. Bitcoin's oversold technicals, Trump's State of the Union, and broader macro relief all played a role. The fear and greed index was sitting at 11, deep in extreme fear territory, often a powerful contrarian signal. But you cannot ignore the timing. Let's zoom out to the big picture, because regardless of JaneStreet, you need to understand what kind of market environment we are actually in right now. Bitcoin peaked at around $126,000 in October 2025. Right now, we're sitting roughly 50% below that peak. January and February 2026 have been the worst start to a year in Bitcoin's entire recorded history. Worse than 2018. Worse than 2022. The RSI, a measure of momentum, hit 15.8. The last time it was that low, March 2020, the COVID crash. And what happened after that? Bitcoin went on to rally over 1,400%. Here's what's even more startling. According to VanEck Research, Bitcoin is currently trading almost 3 standard deviations below its 200-day moving average. 3 sigma. That level has never been reached in the past 10 years. Not during COVID. Not during the FTX collapse. In statistical terms, this is extreme tail territory. And historically, these levels have preceded significant recoveries. But here's the nuance, and this is where we separate the smart money from the crowd. The traditional 4-year Bitcoin halving cycle has broken down. For the first time ever, the year after a halving finished in the red. Why? Because Bitcoin has matured. It's now a macro asset. It trades like a high beta tech stock. It cares about Fed policy, the US dollar, and global liquidity, not just mining rewards. And yet, here's the institutional signal that should give you pause before you write off this market. BlackRock, the world's largest asset manager, named digital assets as the defining investment theme for 2026 while prices were collapsing. The DTCC launched production-grade tokenization for US Treasuries. Y Combinator, Silicon Valley's most prestigious accelerator, announced it would fund startups that pay in USDC. The institutions are not leaving. They are building. While retail panics, the smart money is laying infrastructure. So where does that leave us? If the JaneStreet-driven structural headwind has genuinely been removed, even partially, and if the macro environment stabilizes even marginally, then the conditions for a significant Bitcoin recovery are quietly assembling. Key levels to watch: $70,000 is the immediate battleground. A clean close above that level opens the door toward the $84,000 to $90,000 range. Losing $63,000 support changes the calculus entirely and puts December as the earliest realistic recovery window. So let me bring this home. What we just witnessed this week is a masterclass in how crypto markets actually work. It's not just about charts and RSI levels. It's about who the players are, what they can do structurally, and what happens when those structures shift. JaneStreet's legal troubles may or may not be the catalyst that frees Bitcoin from this range. But the underlying data is clear. We are at historically extreme, oversold levels. Institutional infrastructure is accelerating even as prices fall, and the market is repricing Bitcoin as a macro asset for a new era. If you've been sitting on the sidelines watching this correction unfold, now is the time to be studying, not sleeping. Because the moves that matter most in crypto are made before the crowd realizes what's happening. If this breakdown gave you real clarity, smash that like button. Subscribe if you haven't already. We publish analysis like this every week, tailored for Australian and US investors who want the edge that everyone else misses. Drop a comment. Do you think JaneStreet was genuinely manipulating Bitcoin, or is this a convenient scapegoat? I read every single comment. Let's talk about it. Stay sharp, stay informed, and I'll see you in the next one.